Okay, we're taking a look at the Euro Stoxx 50 as of the close on April 28th, and we're just looking at the big picture pattern here. We're not looking at the very short term, what's going to happen in the next week. We're just interested in where this market's going to peak out and turn into a bear market. What we've been noticing over the past year is this major pivot line in blue. Every time it's hit from the top side, it acts as support. Every time it's hit from the underside, it acts as resistance. Even going back to 2014, you could make an argument that this is a support hit. What I want to point out is that Euro Stoxx has been in a bear market since about April 2015. We are now rallying up and we're getting close to those highs, and we're looking for a place where it will stop. Going back to this pivot line is associated with a very bearish pattern that projects a bottom in Euro Stoxx 50 more than 25% lower than our current price. It's also a rising line, so the longer it takes to get to it, the higher that price will eventually be for our bottom. But I can say that these two bottoms here did not complete that bearish pattern. So without that bearish pattern being complete, we are still biased towards believing in this bear pattern playing out. So now that we know that, we're looking for where declining resistance will come into play. What's out there that could force price lower in Euro Stoxx? And we have two declining resistance lines here in yellow. Either one of them could be the one that pushes a price lower. This first one is this is basically the same line. This is just the margin of error for where it could be. Unfortunately, it's quite wide, but the lower end of it is at about 3,625 as of today, and the higher one is at about say 50 points higher. So in this zone we want to be getting short, and we want to be getting short at the underside of this zone. And the complicating factor is the fact that they are both declining. So depending on how much time is taken to hit there, it could be at a lower price. In fact, if we chopped long enough, we could hit this lower line at a price lower than where we've already peaked. So it's our positioning now is already short Euro Stoxx 50. It's not a full position, it's a partial position. But we want to have some short exposure because we are now getting very close to this declining resistance, and we know that it should come into play in this ballpark. That should force price lower, and then we should see a very good possibility of the bear market target bottom being achieved sooner rather than later, which would be again 25% lower than our current price. On the flip side, if we were to break out of both of these lines, if we get above this top line, then there is no real resistance until quite a bit higher, hundreds of points higher, which comes in right around just above 4,000 as of today. So if this top line is broken, we would get out of any shorts, and we would even think about going long for a run to this next line. That seems to be a very improbable scenario right now. I would say less than 10%, and much more likely as we hit these lines and these resistance lines down here, and we have a significant sell-off. This has taken longer than we had hoped, but we're there, and we just have to be patient and wait for a sell-off to occur. That's my update for the Euro Stoxx 50 on April 28th.